With the U.S. markets now closed for the weekend, Strive Inc., ticker ASST, finished Friday's session at $1.51 per share. That was a significant move, up 4.14%, or 6 cents on the day. Now, when most people see a $1.50 stock that just popped 4% on massive volume, their expectation is simple. This is a volatile, high-risk penny stock, maybe a biotech with a pending trial or a meme stock getting pushed around by retail traders. And when you see the 52-week range from 33 cents to over $13, that expectation seems completely justified. You assume it's just noise, a gamble. But the reality of what's happening at Strive is far more specific and, frankly, far more interesting than just random speculation. That 4% jump wasn't random. It was the market's direct reaction to the company's announcement just days ago that it had successfully priced an upsized $160 million offering of preferred stock. And the reason for that raise is the entire story. Strive has repositioned itself as the first publicly traded asset management Bitcoin Treasury company, and it just raised that capital with the stated purpose of, among other things, acquiring more Bitcoin. The common belief is that you buy a stock like this on the Robinhood app or through SoFi Invest, hoping for a quick flip. You see the ticker trending and you jump in. Most online investing platforms are filled with stories like this. But the institutional mechanics here are far more complex than a simple retail-driven surge. This isn't like buying Tesla stock based on delivery numbers or Nvidia stock based on data center growth. Strive is a direct, leveraged bet on the price of a digital asset, but it's wrapped in a complex corporate structure that brings its own massive risks and potential rewards. The expectation is that you are buying a company. The reality is that you are buying a strategy. And that strategy is to accumulate Bitcoin and try to outperform it, all while managing a new heavy debt load. The 158 million shares that traded hands on Friday tells you this is a battleground. This isn't a quiet accumulation by Fidelity Wealth Management clients or a position being built in a Schwab Intelligent Portfolios account. This is active, aggressive trading. Let's break down the immediate catalyst. The company's pricing of its Series A perpetual preferred stock at $160 million is the dominant factor. This isn't just common stock, it's a preferred offering and it comes with a high price tag. An initial dividend rate of 12.00% per annum paid monthly. This is the core tension for the stock right now. The bulls, the ones who pushed it up 4%, see $160 million in dry powder that the company can use to buy Bitcoin at current levels, effectively increasing its core assets. If Bitcoin appreciates, the company's net asset value soars. But the bears, and this is critical, are looking at that 12% dividend. That is a massive fixed cash obligation the company now has to pay out. The short interest on ASST is astronomical, last reported at over 38%. Those shorts aren't just betting against Bitcoin, they are betting that this 12% dividend will bleed the company dry, forcing it to sell assets or dilute shareholders further just to cover its payments. This is a high-stakes race between asset appreciation and a ticking clock on cash flow. This entire structure is new, having been cemented by its merger with Semler Scientific back in September, which finalized the pivot into this Bitcoin Treasury model. We got a preliminary look at its holdings at the end of Q3 2025, where the company reported holding 5,886 Bitcoins. Now it has $160 million in new capital coming in. This is why the volume is so high. Traders using the Fidelity trading platform or the more sophisticated charting tools on Interactive Brokers are trying to model this. How much of that $160 million goes directly into Bitcoin? How much is held back for working capital or to service that new 12% dividend? The company established a 12-month dividend reserve, but that's a temporary buffer. This is a very different kind of investment than what most people are used to. If you are looking for investment help or an intelligent portfolio, this is the opposite. This is the definition of self-investing in a highly speculative, event-driven situation. It's a pure expression of corporate strategy, and you are betting on whether that strategy is brilliant or reckless. So when you look at that $1.51 price, the expectation is that it's a cheap stock. The reality is that it's a highly leveraged vehicle. Its movements are now chained to two things: the daily price of Bitcoin and the market's confidence in the management's ability to handle this new preferred stock obligation. This isn't like buying Fidelity mutual funds or Fidelity ETFs that track a broad market. This is a single, concentrated bet. Many investors who use Fidelity for their Fidelity brokerage account or Fidelity IRAs might have a small speculation sleeve in their individual brokerage account for names like this. Others, using SoFi stocks or SoFi ETFs on the SoFi trading platform, might be attracted to the low share price and the Robinhood crypto-like feel of the underlying asset. But the financial engineering here is what separates it. The ability to trade Robinhood fractional shares might let a small investor take a position, but the forces moving ASST are now institutional and structural. The company is in a dogfight with short sellers, and the $160 million raise was its latest move. Let's talk about what the company actually is, beneath this new Bitcoin layer. Strive is also an asset management firm, Strive Asset Management LLC, which is its 100% owned subsidiary. That arm manages over $2 billion in assets across 13 exchange-traded funds. This is the part of the business that is supposed to be the cash flow engine. The market narrative is that this asset management business, with its post-ESG branding, can provide a steady base of fee income. The reality, however, is that all the attention and all the market valuation is now squarely focused on the Bitcoin Treasury. The asset management side is almost a footnote to the much larger, more volatile story of the public company's balance sheet. This isn't Apple stock, where you can analyze iPhone sales, or even Tesla stock, where you can track car production. The fundamental analysis here is the price of Bitcoin versus the 12% cost of capital for its new preferred stock. It's that simple and that brutal. Comment below with your thoughts on this strategy. Do you think using high-cost 12% preferred stock to buy a volatile asset like Bitcoin is a smart move, or is it a recipe for disaster? I'm curious to see what the balance of opinion is. Looking forward, the scenarios are stark. The bull case is clear. The company deploys its $160 million effectively, Bitcoin enters a new bull market, and the value of Strive's holdings explodes. Because its share count on the common stock is relatively fixed, this creates immense leverage. A 50% rise in Bitcoin could, in theory, create a much larger percentage gain in ASST's stock price, especially as it forces the massive 38% short position to cover. This is what the buyers on the Fidelity mobile app and Robinhood stock trading platform are betting on. They are betting on a squeeze. They are looking at this $1.51 price and comparing it to the $13.42 high, thinking it can get back there. The bear case, the reality check, is just as potent. That 12% dividend is a relentless drain. If Bitcoin trades sideways, or worse, declines, the company's cash flow will be under severe pressure. It will be paying out millions in dividends while its primary asset is stagnant or falling. The shorts are betting on this. They are betting that the asset management fees won't be enough to cover the dividend, and that the company will eventually be forced to sell its Bitcoin holdings at a loss, just to pay its preferred shareholders. This would be a death spiral. This is why it's not a simple online investment. It's a binary bet on both the direction of Bitcoin and the competency of the company's financial management. Platforms like Interactive Brokers, known for their Interactive Brokers trading capabilities and Interactive Brokers fees that appeal to active traders, are a natural home for this kind of stock. It's not a set-it-and-forget-it holding for a SoFi robo-advisor. It's a stock you have to watch every single day. So as we head into the new trading week, the 4% pop on Friday was not just noise. The expectation was that ASST is just another gamble. The reality is that it's a freshly capitalized, highly leveraged, and deeply embattled Bitcoin treasury. The $160 million offering has reset the board, giving the company new ammunition, but also a new expensive liability. The fight between the bulls and the 38% short interest is about to enter a new phase, and it will all hinge on what happens next with the price of Bitcoin and how fast this company starts paying that 12% coupon. This is a financial drama playing out in real time, far beyond what you'd expect from a simple $1.51 stock.